Hello, everyone. This is Kyle Boston, First Coast Financial Group, and this is your September 2021 market update. In this video, what I'd like to do is I'd like to look at some potential outcomes and scenarios moving forward into the end of the year here for the market. I want to try to identify some risks that continue to haunt this market. I want to give a fresh, non-political perspective on things. And to do that, really what I want to do is take a step back for a second and look at really on a simple level how the market works. So the market's really, if you want to think about it this way, it's a forward-looking mechanism. So it's looking into the future. And what makes this so challenging for investors is that no one has a clear vision of the future. No one's got a crystal ball that's going to tell them, hey, this is how things are going to be, or this is how things are going to end up. And what makes this even more challenging on top of that, analysts, investors, and economists, they all look at data, economic data from the past. So past months, past quarters, past years, and they look at current news to try to create this vision moving forward of how things are going to be. So really, if across the board, if you may have a consensus of a positive opinion or a positive outlook for the future, typically markets will rise on that. And if you have a negative outlook for the future, then markets will fall in turn. And so with that being said, let's look at the bright side. Let's look at some things that may give us a positive outlook here, looking at September and moving forward into the end of the year. What's going to give us a positive outlook into the future? Well, one big thing that stands out to me is this massive labor demand that we have. Go out to lunch somewhere and take a look. If there's not a help wanted sign in the window, I'll be shocked, because it seems like every time I go out, we're now hiring signs, help wanted signs, jobs are posted all over the place. And that continues to be an issue moving forward. Here's a little chart that I've got from Reuters, and it shows, this is off the June jobs report. Again, we're looking back on some data. Just shows that the demand for labor is continually increasing. This kind of bleeds into the supply chain. There is a huge labor demand because there is a huge demand for goods and services in the market. That's all very healthy, very positive. It's saying that we're on the way to a good economic recovery. This is all on the bright side. Another thing we can look at as a potential bright side, or at least I look at it this way, is the fact that policymakers aren't pushing big changes. We don't have a bunch of new stimulus packages being drawn up and put to the House floor for a vote like we were in 2020. We've got everything that's out there right now really has been talked about in 2020, and we all know how long it takes for policymakers to get things done sometimes. And so things like this infrastructure bill, that's all been talked about for a while now. That's not something that just materialized here in 2021 or in the mid to late 2021 at least. Also, the Federal Reserve, Jerome Powell, this guy here, we see him all the time on TV if you watch financial news, and every time he talks, the market's going to move one way or another. There's never really a muted response, at least in recent times, of him coming out, talking, and then the market not reacting to it. And really, what he's voicing is that the Federal Reserve monetary policy, from that perspective, there is still a positive outlook towards reopening, despite everything else going on. Also, he noted that interest rates are going to remain stable, so they're not going to be climbing, at least for the near future. Now, they did note that they're going to walk back some of their tapering, which is really just kind of pulling off some of the stimulus that they kicked off in 2020. And that's to be expected. If we've got a positive outlook, we've got an economy that's recovering, why continue to provide stimulus and push government spending? That may not be the wisest choice. So to move on from that, these are all the bright side. These are all good things. And really, this is why over the last month or so, The market, although it's been volatile, has moved in a positive direction. We've seen consistent growth in the market. Here are some risks that we see that we're looking at. And I'm sick of talking about this, and everyone's probably sick of hearing about it, but COVID continues to be the number one risk to global markets because it affects everything. It affects the small business down the street that's making lunch. It's affecting large corporations. It's affecting supply chains. It trickles down into every aspect, every facet of our economy. Being able to control the outcome of the virus, of these variants, is going to be crucial in the ongoing recovery, economic recovery, and it's going to play a crucial role in how markets are going to perceive the future. It's going to dictate market outlook probably more than most other things at this point in time. That's just where we are here in September of 2021. That being said, vaccines, vaccination rates, and the success of vaccines more than anything is going to be a critical role in this. They're going to play a critical role in this story. So right now, with the variants that are out there, the vaccines appear to be relatively successful in protecting people against them in terms of hospitalization and death rates. What can really throw a wrench in everything I'm talking about or in everything I've said up to this point, and I hope nothing like this does happen, but there could be a variant that may pop up because this virus is mutating like crazy and spreading like wildfire. A variant could pop up that is least resistant to a vaccine, and we may have to revisit our vaccine strategy, whether that means booster shots, creating new vaccines. All of those things can really have a negative effect on our economy and really have a negative effect on the market. Also, another thing we're looking at, and this is a little bit more on the longer term, not the day-to-day, but it could be policy changes that lead us back to normal. So our economy is not operating in a normal state right now. We still have large stimulus injections from 2020. That's still being carried over to some degree till today. And we've got earnings reports. We've got data that's all over the board. We've got horrible earnings reports. We've got great earnings reports. And these things are things that you don't see to the degree of change, at least, you don't see in normal market conditions. So as we move into normal market conditions, and let's say monetary policy starts to change and interest rates start to creep up over time, what's that going to do when our outlook for growth may not be so massive as it was following all this stimulus? There could be some changes, some shaking out, some rebalancing, and some rotation in global markets because of this. Again, what do we look for? Who do we look to, rather, to see if this is coming? That's going to be really the Federal Reserve. It's going to be other policymakers. And currently they're saying that, hey, no major changes are going to happen. But there's a domino effect. So with COVID, with other factors in the world, this could change. And it's going to change at some point. I mean, we can't inevitably sit here and think that things are going to stay the way they are for all of time. So we're looking at that, and we're keeping that in mind in portfolio construction, etc. So as a summary, and really kind of from a house view from our standpoint, really what we're looking at is a very volatile market. We're continuing to see that. It's a cautiously optimistic, very volatile market. And our philosophy here is don't overextend. This is where staying disciplined and staying diversified in your portfolios and overall in your retirement plan as a whole is going to be such a huge boon to yourself. To touch on the volatile market here, this can lead investors in general, if they're not well diversified, if they're chasing high growth or chasing high yield, they're out of their comfort zone, they're really being more risky than they should be in certain cases. This can lead to emotional trading, buying, selling that may not be appropriate. And all the volatility in the market and all of these events that we're talking about can drive investors to make poor decisions based on emotions. And that's really what you want to avoid. And really, that's why we continue to believe that staying diversified, staying disciplined is really the smartest thing to do, and especially in times like this. Another thing that I want to point out are that yields are very challenging right now. So yields are very low. We understand that because you go to the bank, savings accounts, money market accounts, CDs, they're all paying next to nothing. And if we're shooting for a target inflation rate from policymakers' standpoint, a target inflation rate of 2.5% for the foreseeable future, these rates are not going to help keep our money afloat, especially if we're pulling income off of it. So what this does is it pushes a lot of investors out of their comfort zone, saying, hey, I need to chase high yields. I need to chase dividend-paying stocks because my bonds aren't paying me anything. And that can lead to investors overextending, getting comfortable with where they are, and not understanding the risks involved with chasing those high yields. So this is a very serious conversation. I think that if you're not using all the tools available to you, you need to reevaluate your strategies when it comes to yields and making sure that your portfolios can support the income that you're taking out while addressing the risks that are out there in the market. But overall, to sum things up, very cautiously optimistic outlook as we continue. Hopefully this Delta variant is just a blip on the radar, and it's very serious, and it's been a horrible thing regardless. But hopefully we move on through it, have a safe, healthy holiday season. I know everyone's looking forward to that. And as always, if you have questions about what I've talked about today, please visit our website. That's firstcoastfinancialgroup.com. You'll find our contact information, you'll find other resources there, and you'll also be able to book an appointment directly online. Again, this is Kyle Boston with First Coast Financial Group. Thank you so much for watching, and we'll look forward to hearing from you soon.